As today. Let's begin with KP on today's Tech Check. You've been watching sort of how volatility has been measured in the past, KP.
Yes, and Carl, before I actually get to that, I just need to get to some breaking news. So Samsung Electronics and its largest labor union just reached a last-minute deal about an hour and a half before deadline, averting an 18-day strike that threatened global memory supply. So it is a big relief for chip supply, or the chip supply chain heading into tonight. And surprisingly, Micron and SanDisk are still holding up strong in positive territory. Now, to your point, to Nvidia. Nobody's really debating whether Nvidia beats. They've done it the 18 out of the last 20 quarters. The buy side is already running $81 to $82 billion in revenue expectations, with a July guide north of $90 billion. So the beat, dare I say, is relatively baked into the stock price. The problem is the stock hasn't cared. Nvidia has traded down the day after 5 of the last 7 earnings prints, and heading into this one, shares ran pretty hard just over the last 7 straight winning sessions through last Thursday, about $900 billion in market cap, before pulling back to around $224 that we're seeing today. Deutsche Bank says it's really hard to see new buyers chasing from this point here. And this is the frustration with Nvidia shareholders right now. The fundamentals are about as good as it gets. Compute potentially sold out through 2027, according to Cantor Fitzgerald. Hyperscalers have collectively raised their CapEx plans to over $700 billion for this year. And CEO Jensen Huang put a $1 trillion plus revenue target on just the Blackwell and Rubin chip platforms, not including the CPUs and the Grok chip. The stock, though, still trades roughly at 26 times calendar year 2027 earnings versus its own 5-year average of 34 times that you can see on your screen, and peers roughly at 34 times as well. Bank of America says it's a 30% discount to the S&P 500. This is the world's most important AI company, trading like the market just doesn't believe the growth will persist. So what actually breaks the pattern? It's shareholder returns. According to Bank of America, Nvidia has only sent back roughly 47% of its free cash flow to shareholders, compared to roughly 80% for its tech peers. That's a pretty big gap on your screen. So if Jensen Huang gets more aggressive on buybacks, dividends, that kind of opens the door to a whole new class of income-oriented investors, the kind of buyers who have had no reason necessarily to own this stock until now. And that could be what finally closes that valuation gap that has frustrated so many people on our air, so many bulls all year, guys.
Well, but what is the fundamental concern that you hear, Kristina, with the growth, if they have proven over and over again that they beat and raise with bigger beats and bigger raises?
Sarah, you raised it in the last hour, and it has to do with competition. The fact that we are continuously talking now about Google's TPUs, the ASICs, everybody coming out with their own chip, and then really the strength of the CPU market, the central processing units that Intel, that's why Intel shares are climbing so high today. Just the fact that Intel's CEO spoke to Kramer, spoke to the JP Morgan conference, saying that we're going to need so many more CPUs. And so the conversation has shifted away from NVIDIA GPUs towards another set of chips that are imperative to the agentic AI blowout. And so I think that's part of the concern, is that the narrative is shifting away from NVIDIA GPUs.
Okay, Kristina, thank you. You've given us a lot to look for later. And don't miss our interview with NVIDIA CEO Jensen Huang tomorrow, 10 a.m. Eastern, about the results and all of this.